Hi there, Tom Cobbin from Beryl & Watson here again with another video. Today's video is a little different to some of our earlier videos. The focus of this video is more geared toward people who are working despite having been diagnosed with a chronic illness like multiple sclerosis or Parkinson's disease, or maybe a pre-existing injury. The video focuses on things that people need to be aware of in their superannuation-based insurance policies that may impact on their capacity to claim in the future if they do have to stop working because of their existing illness. Many people don't realise they have insurance in super, and it can be a really useful source of disability income to people who have to stop working because of a medical condition or injury. For those that have been diagnosed with a chronic illness, we understand here that they often will continue to work, often for many years and sometimes until retirement age, without issue. We've dealt with many people who suffer from MS in that situation, for example. However, some of those people, unfortunately, will be forced to stop working because of their illness. And if they do, making sure that they do some of these things that I'm going to mention whilst they are employed, whilst they're working, can make a huge difference to their claim if they ever have to make one. So the first thing to be really aware of is that under most superannuation policies, and even under the legislation in place at the moment, you need to make regular contributions into your super account to continue to have the insurance cover, which is there as a default. If an insurance account is inactive, so no contributions for 16 months, the law says that the super fund has to turn the insurance cover off, unless you make an active choice or an active election to keep the cover going. So first thing to remember is either make that active election or make sure regular contributions are being paid into the account. Sometimes even when you make the active election, having infrequent contributions or no contributions at all can cause issues for the way that the insurance is held on the account in the future. The other thing to remember is that oftentimes people with a chronic illness, they basically put their heart and soul into continuing working in order to keep up with financial commitments and whatnot. When they do that, they often neglect other parts of their life, like, for example, their health and their well-being. This is particularly, in my experience, the case where doctors are giving people feedback that there's not much they can do about their condition. Soldier on, truck on, here's some medication, but ultimately you're going to have bad days, you're going to have good days. In that scenario, people sometimes stop seeing their doctor, and that can cause issues if down the track they have a relapse or it all gets too much for them without a frank incident and they decide to stop working. The insurance company in that situation will sometimes try and maintain that their cessation from work is not due to illness or injury, but rather due to a lifestyle decision. Spend more times with the grandkids, go to the beach house, start a new business, whatever it might be. In that scenario, we can see claims rejected. So what can really help to have a successful claim for TPD and income protection is that you be under the care and attention of your doctor. Oftentimes that's a requirement in an income protection context. Similarly for TPD, it can help establish a history of symptoms, a history of struggles in the workplace, and ideally they're sort of leading up to and getting more and more significant, ultimately leading to a cessation from work. And those are the things that we see that often help people be successful with claims. The other things to be aware of, and also if you're not seeing your doctor regularly, or think of other ways to record your symptoms, diaries, employer records if you're comfortable speaking to your employer about your condition, these types of things. The other thing to remember is if you do alter your work duties or hours due to your illness, part of an inevitable cessation or path towards ceasing work, this can sometimes affect the insurance terms which apply. For example, we see in some superannuation insurance policies provisions which say that if you are working fewer than 20 hours or not capable of working 20 hours because of your condition, if you do cease work at a point after you are incapable of working 20 hours, the definition which applies to you is not a work-based definition. It's a harder activities of daily living type definition, and often very difficult to satisfy. So similarly, not being able to do your full duties can be an issue as well. This can be the case under policies leading up to a claim because of the definition which applies, as I just mentioned, or it can be an issue if you're in a super fund that changes its insurance policy or its insurer. So every sort of 3 or so years, super funds go out to the market and they look for an insurance policy with a provider that gives them the best terms. This means that they change their policy. When they change their policy, there are what's called takeover terms. So the new insurance that you get, or all members get, they only get if they are at work or capable of working at the time. Otherwise, you're restricted and you don't get the new insurance coverage. So making sure you're working regular duties, regular hours, these types of things can ensure that there's no issues with you being moved from one policy to another. Moving your super. A lot of people assume that their old super fund talks to their new super fund with respect to insurance as well as money when they move. So for example, they roll their money from their existing Australian super account, for example, to maybe a CBUS account. They assume Australian Super says, hey CBUS, Jimmy's got insurance cover with us, you need to put it in place with CBUS. Unfortunately, that's not how it works. You need to actively make those arrangements. Sometimes in the application for a rollover, there are check boxes to be ticked, but more often you need to make active inquiries. Sometimes you even need to make applications to get the insurance on the account. That requires disclosure of previous health conditions and may lead to exclusions for the condition that you suffer from, or no cover being provided at all. This can be a big problem. So there's some of the things to be aware of if you're currently working despite having a chronic illness or an injury. They're things that are really important to make sure that you maintain your insurance coverage, you maintain the terms that are favourable to you, give yourself the best chance of success with the TPD or income protection claim in the future. As always, I can't cover everything in our 5 or so minutes, so there's a bunch of stuff that's you may need to speak about that I haven't covered. If that applies, please don't hesitate to give me a buzz. I'm happy to fill in any gaps that I may have left open in this talk, discuss things in more detail in a way that's more tailored to your personal circumstances. Give me a call anytime. Thanks for listening.